US indices saw a third week in the red last week as the Federal Reserve's hawkish comments spooked market participants. The commodity markets saw declines as well, as the US dollar continued to strengthen, with the greenback trading at close to 2023 highs. The price of indices recovered this week as higher-than-expected unemployment rate put a dovish spin on expectations of the Federal Reserve. With recent developments in the Middle East, with a war between Israel and Hamas, the Federal Reserve may have to revise their interest rate policy expectations as economic uncertainty continues to rise. Gold prices and crude oil prices also jumped after the beginning of the war. Lockheed Martin is a key defense contractor for the United States and develops the most modern weapons for the US military. With the United States a key provider of defense assistance to Israel, the company could be in for potential new contracts with the US Army. Since the beginning of the war between Israel and Hamas, Lockheed Martin price increased about 10% as at the time of writing this report. With Israeli Prime Minister Netanyahu suggesting this could be a protracted war, there may be continued price volatility in Lockheed Martin. Investors will be focusing on Tesla's earnings next week, with the company recently missing its quarterly delivery expectations. However, the company needs to deliver around 476,000 cars to hit its annual target of 1.8 million cars. Despite the recent miss in expectations, Tesla still appears to be on track to hit its annual target. Should the company report better than expected earnings, there could be volatility in store for investors. Crude oil prices spiked 4% in Monday as a war between Israel and the Hamas organization triggered fear of potential supply disruptions of oil to the markets. With tensions set to remain high for an extended period of time, there could be further volatility in crude oil, with supply uncertainties remaining strong. With Saudi Arabia lamenting its position of voluntary oil cuts until the end of 2023, crude oil price volatility may be a constant feature moving forward. Gold prices continue to move higher as geopolitical tensions in the Middle East spark fear for the wider global economy. Demand for the instrument could continue to rise as the economic uncertainties continue and investors look to hedge their risk. Furthermore, recent US dollar declines have also facilitated relief in the pricing of the instrument. Gasoline prices are at their lowest levels since April as supply prospects recently improved. However, current gasoline stocks in the United States are still 7% below the 5-year average, and with uncertainties surrounding crude oil supplies and ongoing tensions in the Middle East, gasoline prices could experience significant volatility. The EUR/USD recovered recently as unexpectedly hawkish statements were issued by members of the European Central Bank. After initially telling markets that there would be no more interest rate hikes, board member Schnabel highlighted that there is a possibility for further rate hikes given the changing environment. The statement could facilitate an extended period of volatility for the currency pair.